Hey folks, this is Rainer here from Trading with Rainer. So I hope you guys are having an awesome weekend, because for me it isn't so awesome, as I'm actually down with the flu as well as most of my family members. So for those of you out there, I hope you guys drink lots of water and take good care of yourself, alright? So this week I'll be covering mainly the Aussie dollar pair, the Aussie dollar, that's right, because I feel that that pair is actually the pair in play right now, as the recent weakness of it has led to some really nice trend on the Aussie dollar pairs. So without further ado, let's zoom in to some Aussie charts. Alright, so first up, I'm looking at the Aussie dollar weekly chart, and as you can see, I've plotted out quite a number of levels, right, namely support and resistance, and the most recent one we have is actually on the weekly chart. We see a pin bar, right, a bearish pin bar, which is here. So what does it tell us? It tells us that this week price actually tried to rally towards the 93 level, alright, but the bears came into control and pushed price back lower to where it is right now, and it closed at the 90.60 level. So I would expect another bearish week for the Aussie dollar in the coming week. So with that in mind, I'll actually be looking for shorts in the coming week. So let's see at the forward chart where we can look for some short opportunity, and also just look at bearish momentum. Right, over the last, I would say, I don't know, 10 weeks or so, the number of times where the Aussie dollar is actually closed up for the week, we can see is like one time, two time, and this week is just marginally the third time. Right, compared to the down week, we have sorry there, one time, two time, three time, four time, 5, 6, 7, 8, 9. So 9 times it went down, and 3 times it went up over the last 12 weeks. So based on historical price action, it tells you that we have a higher probability that price is actually going down rather than going up over the last 12 weeks of data. Alright, so with that, I'm also looking at short opportunity. So looking at the forward chart, I've identified a key level, which is a 93 level. So if price were to actually rally up towards this level, I'll be looking for short. Would I simply want to short down there? No, I'll actually prefer to wait for a pin bar or a bearish engulfing pattern before shorting it. So for those of you who are not sure what a pin bar or bearish engulfing pattern is, I'll recommend you look at my trading videos on my website at www.tradingwithrainier.com, and I have actually a video dedicated to pin bars and engulfing pattern. Alright, so yes, I'll look for a price action around this region, 93 level, before shorting. For more aggressive traders, you could also simply short at the 93 level, but logically, where will your stops be? Okay, so if traders were to short at 93 level, logically your stop's got to be here, above the recent swing high. So that is, we are looking at about, I would say, a 260 pip stop loss. So I wouldn't really like a 260 pip stop loss, alright, because it gives me a very low risk reward ratio, and thus I would actually rather wait for a bearish price action signal. Right, and that's for the Aussie dollar. Next up, let's look at the Euro Aussie dollar. So for this, again, looking at the weekly chart, you can see strong bullish momentum. Alright, see how price has been closing up higher and higher, and we have so far 1, 2, 3, 4 down candles. And how many up candles do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 up candles. Again, similarly, we'd rather be on the long side than on the short side. So looking at the forward chart, let's see how we can actually get long onto this move. Alright, looking at the forward chart, alright, there isn't any nearby support resistance level, support level where we can look for bullish price action. So for this pair, what I recommend is actually, if price were to retrace the following week, alright, the coming week you retrace down little, I would recommend going with a buy limit order with your stops placed below this swing low. Alright, so with that, your stops, you're looking at about, say, if price were to retrace towards 3/4 of this pin bar, you're looking at about 140, 150 pip stop loss, and a potential of, it's quite a huge potential, because in the weekly chart we can see that price, the next resistance coming in is actually around this level here, at the 150, 154 level. Right, so definitely the 100 over pip stop loss is worth the trade. So yep, so what you can actually do is, if price were to retrace a little in the coming week, try to get your stops below this swing low here, and you may TP at the 154 level, which highlights some resistance on the weekly chart, or simply you can even use a fib tool, right, swing low to swing high, and look to take some profit at the 127 or the 162 level. Okay, so that's how I'll trade the Euro Aussie. And also do know that since this week's an all Aussie dollar play, any momentum or fundamental change in Aussie will definitely affect all your Aussie dollar pair. Alright, your Aussie pair. So what I would say is spread your risk equally among all the different pairs, or perhaps just trade one or two Aussie pairs, because you don't want to have risking like 2% on each trade on all the different Aussie pairs, and when say a good news come of the Aussie dollar and Aussie dollar start to rise up to be bullish, you have losses on all the pairs. So I recommend spreading your risk across all pairs. So perhaps maybe 0.5% on one pair. So if you have 4 pairs, you're only risking 2%. Or if you're more aggressive, maybe 1% on each pair, and if you want to trade four Aussie pairs, you're only risking 4%. So the risk management part is, I guess, up to individual and how you guys want to manage it. Alright, so please do bear that in mind. And the next chart I'll be looking at is the Aussie Canadian. Again, similar story, very bearish momentum on the weekly chart. Looking at the forward chart, again, for traders to look for looking for short opportunities, again I'll recommend paying attention to the 95 level. Alright, for bearish engulfing pin bar. More aggressive traders can look to sell at this level with your stops above this swing high. Wouldn't really consider it a swing high, but it's definitely a point to a location where stops could logically be placed at. So again, I would say it's a better risk reward ratio. Okay, your stops you're looking at about 50 to 60 pips, and you can potentially head on for perhaps to this low shares for close to 150 or 1 to 3 risk reward ratio. Alright, so again, Aussie Canadian is a pair to look out for. Alright, and last but not least, let's look at gold. Alright, gold has tanked quite a bit in recent weeks. Right, look at the weekly chart again. We have this downward momentum. Alright, you can just draw a downward trend line. Okay, so price has been making lower lows and lower highs. There's nothing to argue about that. Right, looking at the forward chart or the daily chart. Let's look at the daily chart. You can see that sorry about that. You can see that price is making lower lows and lower highs. So again, we'll be looking on the short side. Alright, we do not want to go against the trend, as the trend is your friend. And again, I'm a big fan of trend trading. So let's see how we can actually get a shot on this pair. So let me illustrate to you how price actually reacting in gold right now. So we can see lower lows, lower highs, lower lows, lower high, lower low, lower highs, lower low. Right here is about same level. So okay, to retest double top. Then we have a massive price drop, a lower low from another lower high. Right, this is actually a retest. Alright, so it's actually not exactly a lower low, but we have a lower high, and right now price made another lower low. So again, if you're looking for short, again this one, the 1350 is a price level to look at. You can look for again an engulfing or pin bar pattern to go short at this level, or okay, this one I'm pretty excited about this retest. Alright, if price were to retest the 1350 level, alright, you can simply go short on that level with stops above this swing high over here, which is about the 1425 level. Alright, because as we can see that price is making lower lows and lower high. Alright, so if price were to respect the lower lows and lower highs that it has been making over the last few months, alright, so logically or theoretically, price should not take out this swing high over here, because if we were to take out this swing high, alright, the lower low and lower highs pattern will be invalidated, and we're just unfortunate and we have to take the loss. So what I'll suggest is, if price were to approach your 1350 level, alright, place your stops above this swing high over here, right? And in anticipation of lower prices in the coming weeks. Okay, so with that, I hope you guys enjoyed my video. Alright, for those of you who like to stay updated, you can actually sign up on my YouTube at Trading with Rainer, or you can actually go to my website at tradingwithrainer.com and sign up for free updates. Alright, so whenever I make an update, you guys would actually be the first to know. Alright, so with that, I hope you guys enjoy the weekly analysis. Good luck and good trading.